send us your questions and we can answer them. Now, today the question we have is from Raymond, and it's very, very simple. Why rentals are a good investment in real estate? A lot of people, you see these shows in, HGTV about flips, the guys, hammering down, all that kind of stuff. But we believe that rentals are a great investment and a great way to get started in real estate. So the question for Raymond is, why rentals are a good investment?
The question back would be, why not? And why not? Well, one of the reasons buying rental properties as an investment is good for a lot of investors because it's a tangible asset. So you have a house versus a piece of paper when you buy a stock, and also the cash flow. The cash flow, I mean, a lot of cases, in the best case scenario, you can net a 10% cap rate on your, or 10% return.
10%?
10% a year.
I know a banker in my family. I think the banks are paying a little bit less than the percent right now.
Right.
I think it's like 1%.
Right.
They pay 1%. Wait. I just got a text. They actually pay 0.08%. That's 0.08%. That's, I think
that's crazy.
If I move my sofa, I can find probably more pennies there than 0.08%.
So Rafi, that's one of the reasons why a lot of investors, because if I'm a former financial advisor, I was a former banker, and I know most of the needs that a lot of people have with their 401ks, their money markets, CDs, money markets, like you say, are not paying anything. CDs, maybe a 2-year CD paying 1%.
Right.
And annuities, which a lot of people opt to do annuities versus a CD to be able to gain a little more. Those are only paying 2-3% also as well. So in the worst case scenario with a rental property, you could do anywhere from, let's say in your worst case scenario, you didn't know what you were doing. You had a bad property manager. Everything went the wrong way. You still will net more, 4 or 5%, and you still have the asset. And we're only talking about the cash flow. We're not talking about the equity that's built on
Depreciation. Got it. Well, so in terms of, again, comparing to flips, people will say, okay, well, I put X amount and I get a big chunk back. Why then put that chunk of money in a rental? Why, for example, if I have a flip opportunity, I have rent opportunity, why start with the rental? If I'm a real estate investor, why do you think I should start with rentals and then do flips?
I'm going to say 2 words to you, Rafi. It's going to be risk and the fact that it requires more cash. Okay. So the risk, the cash.
So wireless.
Okay, we're back.
We're back. Yeah, we're back. From the risk perspective, why rentals are less risky than flips?
Well, most flips require more money, more funds, because you have the acquisition, plus you have the repairs. In a lot of cases, unlike a rental, you could do a minimum, carpet, minimum here and there to rent it, a quick turnaround. With a flip. 9 times out of 10, you got to bring value to that flip. It's different. So,
So even the scope of the rehab of a flip compared to the scope of the rehab of a rental, it's a big difference there.
Right.
Okay.
So if you're a rookie, you're starting with that, the payoff is more. So the chances of earning more money is there. But the chances of losing more money is there as well.
Okay.
So there's more risk behind it.
Got it. So risk is one of those things that we think, for a beginner, a rental is better.
Absolutely.
The second point was?
The second point is going to be taxation.
Okay.
I like that one better because anytime you flip, you're going to get killed in taxes. All of that, you get taxed on all of it. Versus when you do a rental, you're only getting taxed on that income coming in. So it's a little softer than getting hit with tax bill, a bigger tax bill than your
Got
flip.
it.
A lot of times people don't do that calculation. They think, well, I'm gonna buy a flip, I'm gonna make 30,000 versus making 10 in this rental. But when you take the time you put into it, and the amount that you made for those 6 months, and then you take taxation, that people forget to add that, you're left with 10, with the same 10 that you were gonna get renting a property.
Okay, and then you said that most of the time, because of the scope of the rehab, the entry level in terms of budget, it's lower for rentals, right?
Right, absolutely.
Okay, which was I think it was the third point, right?
Number 3 is you need more money.
Okay.
To do a flip, you need money.
Got it.
So in other words, I would only do a flip, Rafi, if I have enough to do 3. If I have enough money to do 3 flips, I will do 1 flip.
Okay. So if a flip is, is going to be 150, you will not do a flip unless you have 450.
Correct.
Liquid, basically, to the home.
And the reason behind it is it's like anything. Let's say one of them goes bad, you have the other 2 as a backup. But you can't pretend. I mean, you could be lucky and do 1 deal and make it a home run, but it's like anything. You gotta have enough to. All right, I did 1 flip, a quarter, that didn't work. Maybe the next one works, and have enough reserves.
Okay.
You don't want to be put on a spot you put all your eggs in one basket. You did this flip, and then you're pressured to, liquidate the property too early, and not get the money that you need to be getting.
Got it. And I think it's important too that having that in mind, then even the flips that you buy, you have that plan B of what will happen if I have to rent it.
Right.
So one thing that we like to do with our flips here is, hey, what will happen with that flip if nothing happens? If we have to rent it, will we get something close to that 10%?
Right.
Because again, if we buy a flip that we know that we can rent, and let's say that because of the situation we can get maybe just 9%, okay, that's not bad, because hey, we made the investment and then it didn't work out. We rented for a year or 2, and then we come out of that time. So even when you get flips, have a rental, have that plan B in mind where you don't have to liquidate, like you say, and you say, hey, let me rent them. You just had a property like that we're taking off the market. It didn't work the way we wanted, but it's going to work out as a rental. So in that regards, then we'll go from there.
And let me correct myself. Not that you need 450,000.
Right.
That could be with lending as well. But you have to have enough. So if your lender is offering you 80%, you got to have enough for the 20 repairs, 20 repairs, 20 repairs.
Exactly.
I feel like if you're going into flipping with the goal of doing 1 a year, that's not going to work.
Got it.
Because you're going to end up putting half of your year into it. And when you do the net, it's going to come out to the same.
And you could have had 3 rentals.
You could have 3 rentals
during that time.
Right.
Probably similar investment.
Right.
And I think the other thing with rentals is, again, once you have, let's say, 6, 8 rentals, then you can look at them and say which one makes sense to do a major rehab and flip, and you still have the flexibility of doing that.
And to add to that, what I tell clients, let's flip the rentals. But typically when you flip a rental, you really want to give it a couple of years to appreciate. But let's flip rentals. If you're going to flip something, flip a rental. Have it, let it cash flow. You understand the property, knows the ins and out of the property. If there's any issues prior of you selling it, you have proof that the property's been rented for X amount of time, a year, 2 years, then it's very easy to take that to an investor and say, okay, I'm going to sell it for an extra 20. And that's your 30 right there. You got 10 in rent. The end of the year, you sell for another 10 or 2 years for 20. That's the same 30 you're going to make on your flip, but you're not taking the risk of just that one property.
Excellent. Now, let's look at the comments. We have some comments here. We have Faye Walters. You also have to say wearing sunglasses in the discussion takes away from your credibility. Guys playing poker. Actually, Faye.
That's the whole thing. We want no credibility. Don't take us serious.
No. Thank you for the comment, Faye. We were just thinking of something fun to do, but hey, let's do it. I'm putting back 3, 2, 1. Here we are, and we put them back. So thank you, Faye. Sergio, hello guys. What about those programs where they teach you how to buy investment properties and charge you for the puts. What do you think about those? I've heard of those. They have these programs that they charge you $5,000 and go from there. What's your thought? And we have only 1 minute, but
bigger pockets.
Okay.
I listen to a lot of podcasts, and I hear this all the time. There's so much free stuff out there. Once you finish dissecting everything that's out there free, and now you feel like you need to go to the next level, sure. But not until you do that first.
And I think the other thing, and I'm going to use myself as an example. I'm not a do-it-yourselfer. Dalia can tell you that. La lista es larguísima. If it's something that it's an electrician, job, I'll pay for that. I think sometimes the time and the money that you spend trying to get, to be an expert in something, is so much when you can find someone that maybe has the expertise on that, and you can, can I change that, breaker for less than $250? Yes. The chances that I do it wrong, the time that I have to spend learning, sometimes it's better to say, okay, let me see how much, this person charges, and then based on that, bank on their expertise. They made the mistakes, so I'm basically then going to run free. That's all for today. Thank you very much again, everyone, for joining today. I see that Ovi Gonzalez, Baldo Ovi, joined. Thank you, Faye, for your done. We're going to be back next Friday, lunchtime, again, for Greystone Brownback sessions. Where they can find us?
For more information, more deals, private lending, wholesaling, don't forget to visit us at homesforincome.com. That is homes, the number 4, income.com. Thank you. See you next week.
Awesome. See you next week, Friday, Wendy's time.